Okay, imagine this for a second. You step onto a bustling street, maybe somewhere like Lagos, Nigeria. The air just hums with the commerce.
Oh, yeah, the energy is incredible.
You've got the smell of street food, motorbike engines roaring, just this symphony of voices.
Yeah.
And every single transaction happening there. It isn't just a sale. It's like a lifeline for someone.
Totally.
And right in the middle of all that energy, this silent financial revolution has been brewing.
Mm-hmm.
On one side, you've got the established players, the old guard think
Right.
institutions like Zenith Bank,
Yeah,
pillars of corporate finance, big branches, you know the type.
the traditional setup.
Exactly. And then on the other side, there's this audacious new wave like OPay, and they've been meticulously building a retail payments empire,
Yeah.
almost from scratch.
Right, but doing it in a completely different way.
Completely different, riding on the backs of those motorbike riders, the street vendors, the delivery drivers,
Yeah.
the very fabric of that informal economy.
And that's what's so captivating, isn't it? This isn't just a local Nigerian story.
Not at all. It's like a perfect little microcosm. It reflects this global thing happening everywhere.
Absolutely. We're seeing similar showdowns play out from, say, London's financial districts to Silicon Valley's tech hubs.
São Paulo's markets, Singapore's innovation centers. It's the same basic story. Legacy banks everywhere are facing these, well, almost existential challenges.
While these nimble fintechs are just fundamentally rewriting the rule book for finance.
So today, that's what we're doing. A deep dive into this global clash, old guard versus new wave. We want you to get a shortcut to understanding this massive shift, spotting the patterns playing out across continents.
And figure out what it all means for the future of finance, how you interact with money even.
Now, we should say, we're piecing this narrative together.
Yeah, from public reports, news articles, company statements, the kinds of things available out there. We can't know every internal detail, obviously.
Right, but the overall picture, the strategic plays, the big trends, that's what we can really get a handle on.
And what's truly fascinating here, I think, is how these local skirmishes, like Zenith versus OPay, they reveal these universal truths about innovation, yeah, but also distribution, and maybe most crucially, trust.
Trust. That's a big one.
Especially in a global economy that's changing so fast. It's about so much more than just fancy tech. It's really about deeply understanding human behavior, right? And those unmet needs that the traditional systems just couldn't or wouldn't address.
Okay, so let's talk about the scale of this shift, this global fintech tsunami, you could call it. I mean, over the past 5, maybe 6 years, fintech's just exploded.
Oh, definitely. From niche player to absolute mainstream disruptor.
And the numbers, they're almost hard to believe. Global fintech revenues, right? They're projected to soar from around, what, US $245 billion back in 2021
Yeah, something
to over $1.5 trillion US dollars by 2030.
1.5 trillion.
That's more than a 6-fold growth
Yeah.
in less than a decade. It's not just a market shift. It feels like a fundamental rewiring of how financial value moves.
It really is.
Yeah.
And it's not just a general surge either. Specific bits within fintech are seeing this incredible, almost dizzying acceleration.
Like what?
Well, think digital banking, payments, wealth tech, tech applied to investing and financial planning. These areas, they've been growing at over 40% annually in lots of regions.
40%. That just blows traditional banking growth rates out of the water.
Completely. It really underscores how fast these new players are grabbing significant market share, often, straight from the incumbent banks.
And they're not just growing, they're growing faster. Significantly faster. We're seeing reports from places like QED Investors and BCG saying fintechs are expanding at like 3 times the rate of traditional financial institutions.
3 times. Wow.
Yeah, and this dominance is really clear in those underserved segments. Lower income households or that booming buy now, pay later BNPL sector.
Right, the installment payment thing.
Exactly.
Yeah.
Which kind of highlights that dramatic insight we keep hearing. Legacy banks are losing the streets. Code, not distribution, wins the war.
Yeah, that phrase really nails the core conflict we're looking at today. And that dynamic, it becomes super clear wherever you find, say, thriving informal economies, or maybe low trust in the traditional financial systems,
Which is common in many places.
or even just significant institutional inertia within the established banks. They're too slow to adapt.
Right.
These conditions basically create this fertile ground where fintech insurgents can just step in and, thrive because they're solving genuine everyday problems for people.
But it's important to add, they didn't always win. right?
Oh, absolutely not. It's not a guaranteed victory. The landscape is constantly shifting. It's a dynamic battle. Lots of failures along the way, too.
Okay, so the conditions are ripe globally. We've seen it play out dramatically. Let's zoom in on some of these front lines, starting maybe with the UK and Europe.
Good place to start. Yeah, the UK and Europe really saw the rise of the neobanks.
These are the all-digital banks, mobile first, no branches. Names like Revolut, Monzo, Starling.
Exactly. And they went from basically zero market share in, say, 2019 to handling millions of primary banking relationships just a few years later, by 2025.
It's kind of stunning how quickly they embedded themselves into people's daily financial lives.
Revolut is a prime example of that meteoric rise, isn't it? Launched 2015, Storonsky and Yatsenko.
Right.
And it just shot up. Became Europe's most valuable private tech company for a while. By 2025, valued at a crazy $45 billion, over 60 million users, billions in revenue.
Wow.
Their success wasn't just about being fast, though. It was leveraging tech to bypass all those old costs and, crucially, the geographical limits of traditional banking. They built services that were global from day one, essentially.
And Storonsky, one of the founders, he had that quote, didn't he? Something like, "We built fast, global, frictionless, while banks built branches, paperwork."
That sums it up perfectly, that contrast.
Yeah. And Revolut wasn't shy, expanding super aggressively. India, Brazil, the US, Israel. They went everywhere.
But, and this is a big but,
Sure.
as these companies get massive, a whole new set of challenges pops up.
The scaling problems.
Exactly. That era of, let's call it fintech exceptionalism, where they could sort of fly under the radar without heavy scrutiny, well, that's definitely over now.
You start getting the scars of growth, right?
Precisely. Increased fraud complaints start rolling in, regulatory fines. It happens. Which raises that really important question. As these fintechs mature, how do they balance that innovative, fast-moving DNA with the increasing demands of compliance, regulation, consumer protection?
It's a tough balancing act.
It really is. The regulatory spotlight gets much, much sharper. We saw this with Monzo, too. They actually hit profitability in 2024, which is huge.
Yeah, £15 million pre-tax.
Right. But they're still battling to differentiate themselves in what's become a really crowded market, and they've had some leadership changes, too.
So even the success stories, the journey isn't just a straight upward line.
Not at all. They face the same headaches as any large regulated financial institution eventually. They're not just nimble startups anymore.
And what about the legacy banks? Were they just watching this happen?
Well, they tried to react. HSBC, for instance, launched their Zing app in 2024. Remember that?
Vaguely, yeah. It didn't last long, did it?
Nope. Folded incredibly quickly, just couldn't get traction. Reports said fewer than 9,000 active users when they were targeting 12,000.
Ouch.
Yeah.
Why do you think it failed so badly?
Probably a mix of things. Maybe it lacked the agility, the speed of onboarding wasn't smooth enough. Or maybe it just didn't have that deep understanding of the specific customer pain points that the neobanks had built their entire businesses around solving from day one.
A stark contrast.
Yeah.
Okay, so from Europe's neobanks, where do we look next? Asia.
Absolutely. Let's shift to Asia Pacific, because many people see this region as the real engine room of fintech innovation right now.
Led by?
China and India, primarily. The forecasts are just wild. Asia Pacific is expected to become the largest fintech market globally by 2030. We're talking a compound annual growth rate CAGR of around 27%.
27% CAGR. That's enormous scale.
It's staggering. And India, for instance, has seen this genuine unicorn boom in fintech.
Unicorns being the billion-dollar startups.
Right. India went from maybe 15 fintech unicorns in 2021 to 26 by 2024, with a combined value hitting $90 billion.
90 billion. What made them so successful there?
What's fascinating is how they nailed local integration. It wasn't just about apps. They built these vast networks connecting marketplaces. They popularized UPI wallets for instant, super easy payment.
The unified payments interface. Game changer.
Total game changer. And they seamlessly integrated with offline merchants, the corner shops, everyone. It wasn't just digitizing, it was hyper-localization. Understanding those existing economic structures, even the informal ones.
So fitting the tech to the reality on the ground, not the other way around.
Precisely. And then you've got players like Singapore's Airwallex, another international superstar story. They show how you scale beyond borders.
How so?
They scaled incredibly aggressively, operating in like 130 countries, processing an annualized $100 billion by 2024.
$100 billion.
Yeah. And they serve global merchants by basically building their own pathways. circumventing the old, slow, expensive, traditional bank rails like SWIFT.
So they built their own digital network for money movement.
Kind of, yeah.
Yeah.
Offering this new kind of global financial backbone that's just way more efficient for businesses doing cross-border transactions, faster, cheaper.
That point about building new rails, new distribution methods,
Yeah.
that seems critical. It's a pattern.
It is, and we see echoes in the U.S. too, actually, especially with regional banks.
How are they faring?
They're under immense pressure, really squeezed from both sides. You've got the agile fintechs chipping away at their customers, deposits, loan books,
And then the big guys.
and then the huge tech investments being made by the giant national banks,
Yeah.
making it incredibly hard for smaller regional players to compete on features, on scale.
So consolidation or falling behind.
That's often the choice, yeah. We've seen a lot of mergers just for survival, or banks just falling behind in the innovation race. The old guard, like you said earlier, is definitely blinking globally.
Which brings us neatly back, full circle almost, to Nigeria. We can now connect these global threads directly to that Zenith versus OPay situation on the streets of Lagos.
Exactly. And the parallels aren't just interesting, they offer really profound lessons in strategy, I think.
Okay, let's draw those connections.
Yeah.
How about distribution over code? We talked about Revolut's app appeal, Airwallet's global rails. How did OPay compare?
Well, while those others built trust through slick digital experiences, OPay's agent network in Nigeria built physical trust first. Those guys on motorbikes, the kiosk owners, they became the human face of OPay.
Ah, so a crucial bridge, especially in a market where maybe you don't automatically trust a new app, but you might trust the person you buy airtime from every day.
Precisely. Human interaction building that initial trust layer, which leads right into that informal economy dominance point we saw in India.
Integrating with how things actually work.
Yeah. Fintechs like OPay that genuinely understood and worked within the informal markets, they consistently leapfrogged the legacy banks. They didn't try to force everything into formal, rigid boxes. They empowered the existing networks.
Makes sense. And then there's speed versus legacy lethargy. We mentioned HSBC's Zing fizzling out. How does that compare to Zenith?
Well, you hear people describe Zenith's branch-focused model as operating at, quote, decades-old speed.
Ooh.
Yeah. And in a super fast-moving, mobile-first economy like Nigeria's, that kind of institutional inertia, that slowness, is a massive disadvantage. OPay was just faster, more agile.
Okay, but this raises that other question, the one we touched on with Monzo and Revolut in Europe. Maturity, regulation.
Right. As these fintechs scale up, like OPay is doing, the novelty wears off a bit. And the weight of regulation, compliance, scrutiny, it increases.
So will OPay soon face those same pressures to maintain compliance, prove profitability, deal with fraud at scale?
It seems inevitable, doesn't it? The regulatory environment always plays catch up. That's probably the next big test for these massive market disruptors globally, including OPay.
And we can't ignore the geopolitics either, can we? You mentioned Airwallex, but OPay.
OPay, yeah, and Ant Group more broadly. They're Chinese-backed platforms. And they're actively expanding their footprint, taking successful models from Asia and replicating them in Africa and elsewhere.
That's a powerful strategic play, leveraging proven approaches in new markets.
Absolutely. And potentially reshaping financial landscapes based on maybe different regulatory philosophies or economic models down the line. It adds another layer of complexity.
It really does. You know, to truly get the heart of this difference, though, the human element, you need to hear from people on the ground. We've got a couple of perspectives that really capture it. First, listen to this from an ex-banker at Zenith.
Okay.
Voice simulation. We believe Nigeria would leapfrog digital, but digital without street trust. That's still cash. Zenith's branches are empty. Agents have the volume.
Wow. Branches are empty, agents have the volume. That says a lot.
Doesn't it? And now compare that to a former OPay agent coordinator talking about their approach.
Let's hear it.
Voice simulation. Our bike riders loved the fee model. 10 per transfer, that's loyalty. We hit mass through WhatsApp groups, daily payouts.
Simple, effective, built on existing networks like WhatsApp, and focused on the incentives for the agents themselves, that Euro fee creating loyalty.
Exactly. What's so striking here is it wasn't just about the tech, it was about, like, distribution psychology. OPay actively went out and recruited those riders, those kiosk owners. They filled gaps, physical and trust gaps, that Zenith, stuck in its traditional model, simply couldn't reach.
They understood the street, as you put it earlier, in a way the incumbent just didn't seem to.
Which brings us to the core takeaway, maybe.
I think so. Looking across the globe, from Nigeria to London, Mumbai to Singapore, the fundamental clash is really the same, isn't it?
Old guard versus new wave.
Yeah. The old guard anchored in assets, branches, legacy systems, versus the new wave anchored in agile distribution, clever tech, and crucially, that deep, empathetic understanding of human needs and behaviors.
But in this picture, it really exemplifies those global trends, but with that vital, hyperlocal twist. Right. Tailoring it perfectly for Nigeria.
Perfectly put. While Zenith kind of embodies that universal struggle of legacy players everywhere, often slow, maybe bureaucratic, sometimes just out of touch with how the market is actually evolving.
And it's undeniable now. Fintech isn't on the fringes anymore.
Oh, not at all. It's firmly in the financial mainstream. We're rapidly heading towards that trillion-dollar era for the whole sector.
Always.
Always. With maturity comes new challenges. The whole battlefield is shifting again, and trust is becoming absolutely paramount, maybe even more than pure tech.
How so?
Well, regulators are definitely sharpening their focus. Markets, investors, they're increasingly demanding not just insane growth, but actual demonstrated profitability and solid compliance.
So the era of just growth at all costs is fading.
It seems to be giving way to a more mature phase. Sustainable business models, managing risk properly, building long-term trust, that's the next chapter for fintech.
Okay, so wrapping this up,
Yeah.
what does this all mean for you listening? As businesses, as industries everywhere continue to evolve so damn fast, what are the core lessons here?
I think it comes back to those fundamentals, the value of speed, yes, but also the power of really innovative distribution. And maybe above all, the absolute necessity of truly understanding your street.
Wherever your street, your customer, your market actually is.
Exactly. Getting close to that reality.
This has been a really eye-opening deep dive. I hope you found those insights, those connections, as valuable as we did.
Yeah, lots to think about.
Definitely. So keep your eyes open maybe for those subtle shifts, those quiet disruptions happening in your own industries, your own work.
They might just be the start of the next big wave.
In understanding these patterns, well, it could give you a powerful edge.
You've been listening to Empire and Legacy, African Business Chronicles. Our hosts are Zuri Mwangi and Kwame Adeyemi. If you enjoyed today's episode, be sure to follow us on LinkedIn, WhatsApp, X, Instagram, and YouTube. All links are in the show notes. Subscribe to the podcast on Spotify, Apple, or your favorite podcast platform, and share this episode with fellow business leaders. Main episodes are released each Monday. Our hosts delve deeper into the CEOs at the helm on Wednesdays. On Thursdays, we explore the global perspectives, the standout businesses and CEOs, emerging trends, and geopolitical developments, presenting both risk and opportunity. Until next time, stay tuned.